Welcome to the Wall Street Crossover. My name is Nick the Moose Batsman. I'm Commander-in-Chief Tip TV. It gives me great pleasure to introduce Darren Sinden, market commentator of Admiral Markets, who will join us for this sponsored segment. Darren, morning or good afternoon to you.
Good afternoon, Nick.
How the devil are you, sir?
Yeah, not too bad, thank you, given the markets and the weather conditions.
Well, I've read David Buick, one of our friends, wrote his blog today, and he put Street of Dreams, referencing the Dow, and I thought straight away it's the Street of Fear. Is this the final chapter on Wall Street?
Look, it's obviously disconcerting, and then it's a big move lower that we've seen so far, and obviously it goes against the grain because for many people, US markets have been a one-way bet. We're in what's ostensibly a 7-year bull market. What we've talked about this, haven't we? We've said that it can't go on forever. That the markets were ripe for a correction and ripe for a change, and I think you'd be sort of deluded if you hadn't taken some of that on board. So what we've seen so far could be considered to be healthy, a retrenchment. We've probably got some more pain to go through this afternoon and perhaps tomorrow, but after that, let's look again. It's August as well. Lots of people are away,
and obviously light volumes.
Yeah, so there are plenty of mitigating factors. Nonetheless, it's it's quite unsettling if you do have positions and you are seeing profits disappear.
Understood. Okay, well, if you're watching it for the first time, we've got a number of slides to go through. If there's anything you think we can improve on in terms of coverage, please get in touch with us. Right, let's kick off the first one. Data released over the European session. What's caught your eye this morning?
Well, actually, most of the calendar or cupboard as far as the European data was absolutely bare. No European data to speak of at all. But to be fair, even if there had been, I think it would have been overwhelmed by what's actually going on elsewhere. The first headline here, then, one I'm sure you've been talking about all morning, that China equities or Chinese equities have sold off by a further 8.49%, erasing all of the gains they'd made in 2015. And when you think about the tear that they've been on, I think they're up 28-29%. This year alone. That's quite a significant retracement. That obviously followed on from a sharp sell-off on Wall Street, which was a pretty ugly session. But again, as we said, it's August. People on holiday. Volumes were relatively thin. European equities, these things reverberate around the world, have fallen again this morning by around 2.5%. Again, adding to last week's losses. And the sell-off has not just been confined to equity markets, however. So crude oil has also suffered once more. So WTI crude, the West Texas Intermediate, the American flavour, has traded down through $39 per barrel, whilst the European-centric contract Brent has traded below $45 per barrel. And these are fresh 6.5-year lows for crude, so even beyond the levels that we saw when we got the news from OPEC before Christmas. So worrying times, but again, nothing that we haven't pointed out was potentially possible in the last few weeks.
Understood. Okay, so let's move on to the second slide, the European movers.
Okay, we just thought I'd look at a couple of sectors here rather than individual stocks. So we start with the FTSE 350 mining sector. That's ticker NMX 1770. The sector has fallen from 17,793 in the last year. It's trading down 5.34% or thereabouts at 9,616. So
it's almost halved.
Well, yeah, exactly. So I was going to say it's effectively halved. Why? Well, it's not a great surprise as to why it's done this. Slowing global demand, weaker commodity prices, often off the back of a strong US dollar. Although we'll see that trend may be changing, and the question mark that still remains over whether we're going to see a hard or a soft landing as far as the Chinese economy is concerned. Obviously, the way things are moving there at the moment, the perception might be that we're aiming more towards a hard landing than a soft landing. And then I thought we could look at a defensive sector, which, with traditional portfolio theory, should be relatively unaffected by what's going on at the moment. So Euro Stoxx healthcare sector, which is the ticker SXDE, trading around 786.5, down 2.92%. But that in itself tells its own story. That what must be one of the most defensive sectors out there could trade down 3% on a day like today. So even defensive sectors are selling off in line with wider indices. And the other thing that caught my eye was the European utilities sector, which is very much domestic orientated and only looking really into the European economy. It's down by 3.28% as well this morning, so very messy.
So a general sell-off. Okay, so let's move on to M&A, rumours and movers.
Okay. Well, even in the teeth of the storm, there is some M&A to talk about, if only briefly. And strangely enough, it emanates from the Far East and from if not China proper, it's near neighbour Taiwan. Advanced Semiconductor, which is ticker ASX in the US, looking to buy its home rival Silicon Precision, ticker SPIL, SPIL in the US. Going to pay around $919 million to secure Silicon Precision. These two businesses, as I say, both based in Taiwan, both listed in the States through an ADR program. They design, test and package and compile chip systems. So these two are likely to, as I say, despite the China turmoil, and will form a Taiwanese dollar company with a market cap of 10 billion Taiwanese dollars, I should say. If we look at how the Taiwanese stocks, and there are quite a few tech stocks from Taiwan trade in the US, how they've performed this year, the table here shows us they've had a very poor 2015 year-to-date performance in this far column. Most of them are down in double-digit losses. However, what I did think was interesting that Silicon Precision actually has picked up over the last month and the last week. So it's up 3.88% for the month and up 16.5% over the last week. So it stood out like a sore thumb, really, given what's gone on in the rest of the market. But we'll see if that deal continues to progress.
Understood. OK, so let's move on to US data points to keep an eye on today. It's a quiet week this week, isn't it?
Yeah, it is. I mean, August is notoriously...
In terms of data anyway.
Notoriously quiet, but for these kind of things. But we have got a couple of talking points. So first of all, the Chicago Fed National Activity Index for July, another one of the reports put together by the regional Federal Reserves. This one looks at the average of 85 economic indicators, so it's quite an in-depth number. Though sadly we're not looking for any fireworks particularly from the reading, so we're looking for a read of plus 0.2 from the headline figure against a prior read of plus 0.08. To put this into context, if we look at the monthly figures and the 3-month moving average of these indicators, they've actually been rising recently, but it's not exactly setting the world on fire. Perhaps of more interest will be Governor Lockhart, the Atlanta Fed governor, speaking to a pensions conference in Berkeley in California this afternoon. Remember, he's the interest rate hawk, or one of the interest rate hawks on the FOMC. He's speaking at 5 to 4 New York time or 5 to 8 London time. So it will be interesting to see if what's gone on in the markets in the last week has tempered his view of rate rises.
I'm sure. Well, we shall see. OK, let's move on to the US pre-market movers and chart levels. OK,
well, I've broken with a sort of tradition here, and rather than pick out individual stocks pre-market, I thought we'd look at some broader measures. So I've gone with the S&P 500 index futures. Shortly before we came on air, they were trading around 1929, down a further 2.16% from Friday's close. And then their stablemate, the Nasdaq 100 index futures, trading around 4,048, down about 3.61%. So US equities look set for another difficult session, and as I say, this sell-off reverberates around the globe. The reason I think that Nasdaq is harder hit is that there were some big moves in Asian technology stocks. I think Alibaba, I'm right in saying, is one that's floated in the US recently. That's likely to go back below its IPO price this afternoon. And Amazon, I've seen that cooled down 4% as well. So of the 3 major US indices, it's the Nasdaq that's probably going to feel the pain the most this afternoon.
And in terms of chart points?
Yeah, just to clarify that when we're talking about levels here, we're actually talking about cash indices levels rather than the futures we've referenced in the pre-market movers. So for the FTSE now, 59.20 is our downside level, and we've got to look for a move back to and above 61.51 for us to make any further headroom. Obviously, near term, the risk is still to the downside. For the DAX, 9,760 now, plays 9,910. Apologies for the wide range there, but that's what we're left with after the sharp moves lower that we've seen in recent days. Moving back to US indices, 1,912 now for the S&P is the downside level to watch, and it could easily test to there. 1926, it would need to get back above and stay above to have any hopes of gaining ground, but as we've seen from those pre-market indications, that's not looking likely. And for the Dow, I think, as I said before we came on air, we've had a 1,000-point change in terms of our support levels over 2 sessions. So we're now talking about a 15,000 handle, 15,945 on the downside, and that was at 16,949 on Friday. Plays 16,123 to the upside, but again, the risk remains to the downside there, I suggest. The biggest move again.
Euro dollar.
Yeah, you know the euro's been fiercely strong, and the dollar, you know, a bit wimpy. I think I can probably say so. 114.51 is our downside level on euro dollar now, and a new big figure in the upside of 115.06. And again, it looks like, you know, the euro could push higher and test up above that upside level. Aussie dollar, US dollar slightly more subdued. 72.00 will stick in now as our downside level, plays 72.75.
6-year lows, I think, on that one.
Yeah, the range has widened slightly, as you might expect with the volatility. Perhaps the other surprising move was the yen strength, but I think, again, that says more about the weak dollar than it does about any benefits to Japan. 119.95 now on our downside, and I believe we have tested below 120 intraday already. Plays 120.62 on the upside. Of course, it wasn't that long ago that we were, in the last week, we were talking about a test, or the possibility of a test above 125. So,
yep.
And then finally, cable, 156.75 on the downside, plays 157.40. Once again, we're trying to assert ourselves above 157 and stay there. But given the way the dollar's performed elsewhere, that possibility shouldn't be ruled out.
Understood. Okay, so let's wrap up with one final slide in focus. The VIX, fear and greed, question mark.
Yeah, well, you know, this is, for those that don't know, the VIX index measures the level of volatility in the options of the S&P 500 stocks. Sounds complicated, but often as not, it's referred to as the fear index. But for the last 3 or 4 years, it's been oddly subdued, I think we could say, during and sort of in the aftermath of the Fed's QE program. For the avoidance of doubt, a higher read of this index suggests that there's more fear than there is greed, and that, you know, and that the markets are likely to be volatile. A sharp spike is what we've seen in the VIX over the last few days. In fact, it's doubled its in value in the last 7 days, and it's broken above that very long-term downtrend line drawn from the highs of 2009. And it closed on Friday at 28.03. I think, given what's gone on today, and, you know, with the further weakness signalled for US markets, we're going to move back to and probably through the highs of October around 30.7. But just to put it again into context, look, this is the move we've had so far. These are the much more significant moves in 2009 and again 2011-12. So whilst it's been quite chastening, it's not panic stations just yet.
Understood. Okay, Darren Sinden, market commentator at Admiral Markets. Thank you very much for that segment. We'll see you same time tomorrow, 1 p.m. You're on the live show tomorrow, aren't you, at sort of circa 10 past 10, Indeed. If people want to see further thoughts from Darren. Okay, that wraps up the Wall Street crossover show. All I would say is just be careful out in a very tricky financial world today.
Absolutely.
Thank you, Darren. Okay.